and welcome to Edison TV with me, Michelle Livings. And today I'm very pleased to be able to welcome Chetan Sehgal to the show. So hello, Chetan.
Hi, Michelle.
Lovely to have you here from TEMIT.
That's right.
So first of all, let's start with a very basic question. What does TEMIT offer investors?
Okay, thank you, Michelle. That's a good question. So TEMIT is one of the longest trust in the London Stock Exchange, giving exposure to emerging markets. And TEMIT therefore offers its investors long-term investment opportunities within emerging markets.
Okay, fantastic. So then, why are you positive on the outlook for emerging markets? And also, what do you consider the main risks to be?
Right. So, going back, if you see when emerging markets started out, most people looked at emerging markets as a source of low-cost resources, low-cost manufacturing. But things have changed quite a lot, in the last 20 years. So emerging markets still have the lowest cost of resources, still have manufacturing, but it's now high-tech manufacturing, a huge consumer base, a lot of demand for consumer goods, as well as now we've seen leadership in technology coming from emerging markets. So what emerging markets offer today is probably much more than what they offered when we started off 20 years back or 30 years back.
Yeah. And so what then do you consider those main risks to be?
So the risks of emerging markets are really the risks of all markets. You have geopolitical risks, which are obviously present in many markets. You have policy risks from governments, because governments today are looking for various ways of raising cash and they have policy priorities. So those are risks as well. You have corporate governance risks, which are not just about emerging markets, but they are about all markets as well. You have business risks because companies are making investment decisions and those investment decisions can be right or wrong, but that's again everywhere. So I wouldn't say that there are specific risks to emerging markets per se, but you have to be more mindful of policy, geopolitical issues, as we've seen in the last year, and because you're dealing with so many more markets, you have to actually look at so many more factors.
Right, okay, that's interesting. So let's talk about recent portfolio activity then. Could you provide some examples of that and the sort of rationale behind these transactions?
Right. So, if you stepping back a little bit, our investment philosophy is all about sustainable earning power at a discount, and we look at a lot of structural opportunities in emerging markets. The structural opportunities being demand for electronics, digitization, transformation, etc. So if you look at our framework as well as the opportunities, at this stage, we are very, very well positioned in semiconductors. We believe that semiconductors have become part and parcel of our lives. All of us have many gadgets, the phones, the iPads, the PCs, the AirPods, and now you're going to have electric batteries and cars, etc.
I was going to say cars,
cars as well. So you have so semiconductors have become all pervasive. We've also now invested much more in the battery side of things. Electric vehicle batteries, batteries for tools and outdoor power equipment, etc. So that's a very big opportunity, and our recent portfolio activity has been really towards these sectors. We've invested in renewables as well, because we believe that eventually renewables is the reason why you'll be able to tackle the climate change challenge.
Yeah, absolutely. Yeah. Really interesting. So just thinking back to the last year, what are the challenges that have been faced and how are you responding to these?
Yeah, so if you go back, I think as I started off, geopolitical issues did come to the fray last year. So you think about it, I mean, just in the last 2 years, you've had COVID, which was quite unprecedented for all of us. The response of government was also very, you weren't very sure how governments would respond. and now you've had this Russia-Ukraine crisis. You've had tensions between the US and China in terms of trade and investment policy, etc. So you've seen a lot of these macro factors starting to play up, which really is not an ideal condition for a fundamental investor to be investing based on that. So we've been impacted by some of those decisions. So right now, what we are doing is we are just we see four realities right now, and we are just talking about it. But the first one is we have to factor in the Russia-Ukraine conflict, and what does it mean for commodity prices, for supply chains, etc. The second is all the rest of the world has actually come out of COVID, but China still has a zero COVID policy, so that has its own impacts and bearings. The third, we are now seeing that inflation has risen up because of the first two issues probably, but the Fed is now hiking rates, and that changes the cost of capital and your expectations as well. And the fourth really is all about climate change, and that again is a long-term question mark as to how and who's going to bear the cost. So how is climate going to be tackled, and who's going to bear the cost? So when we construct our portfolio, we have to keep those four elements in mind, and then look at whether we are still buying companies with sustainable earning power, and are they really at a discount to what they're worth?
Yeah. Absolutely. If I can just ask you one more question. You've already mentioned Russia and the Ukraine in your last answer. Could you discuss TEMIT's Russian exposure?
Yeah, so prior to the conflict, we had direct exposure in Russia as well. We were actively overweight Russia, and obviously that did not play out well, and we marked most of those assets to zero, which we had. The other was we also had indirect exposure. So some of our portfolio companies also were invested in Russia. It may be a small amount, 3 to 5% of the assets, but that is an impact as well, because many of these companies have ceased operations in Russia as well. But I think that is true for most other markets as well. So it's not just emerging markets which are exposed to Russia, but a lot of the other markets or companies also exposed to Russia. So there's been a detrimental impact. We've written down the assets to zero, and we are looking for a resolution as and when it comes our way.
Yeah, of course. Well, listen, thank you so much, Chetan, for coming in today and talking to us. It's been really interesting. So thank you for your time.
Thank you, Michelle.
And thank you for watching.
Thank you.